All right, so we have Chris Pulver coming up.
Hey, Chris.
Hey everybody, how are we doing
Hi,
today? Happy
Chris.
Saturday.
Enjoy the interview.
Hey, Chris.
Hey Dale, how are
Uh,
you, man?
great to meet you.
You too.
You know, I've read your bio and former PGA professional, certified instructor,
Yes.
and I usually ask people about their journeys into what they're doing now.
hmm
Were you trading while you were a professional golfer?
I was, yes. I've told the story many of times. It's pretty interesting. Golf fortunately took me all over the world, but happened to be once I got into instruction. One of the gentlemen that came to see me all the time. This was in South Florida, and one of the guys that came to see me all the time would always come in around 11:30 on a scooter, shorts, t-shirt, sunglasses, hang out in our studio, hit some shots, go play Doral. And he did this like 4 or 5 times a week. So I was always interested because our CRM, client management just said he was in finance, but I'm like, this isn't your typical like suit and tie, finance job. So I'm like, what does this guy do? Over the course of several golf lessons and helping him on his golf swing and fixing his slice a little bit, turns out he was a full-time fund manager. So I learned the ropes from him. I got heavy into Forex because of that. I've been trading ever since. That was back since 2008. I've been trading full-time since 2011. I didn't quit my day job. I continued to work in the golf industry. I let instruction take me all over the world. I lived in Southeast Asia for quite a while, traveled all over the place, and built up a nice little nest egg to come back, take care of several years of expenses, and give it a real effort to make sure that if I'm going to do this full time, that I've got the capital to do it. Expenses are taken care of, so I can focus on the process. And I think that sports background, competitiveness helped me a lot. It helped me kind of keep a clear head and always be looking to improve and try different things and stay open-minded. And it was interesting because when I came back to the States, I went back and actually worked with this gentleman, and just saw that his trading philosophy and his strategy was about as stubborn as his golf swing. So he is no longer a Forex trader. He's no longer a fund manager. He fell back into real estate and some of the registrations and licenses he's had, but I'm still a trader. So, I mean, I've been on a pretty creative journey, and I'm always, and that's what I want to talk about today. I mean, my presentation is trade to be profitable, not perfect, simply because I know that, the market every year seems like it's a clean slate. I mean, it's the last several years for me have been very consistent, low risk, reasonable, significant reward, but
You brought
consistent.
up a very important point, though, Chris, that
Sure.
you went away, you stayed on the tour, you built up a nest egg, a war chest, enough so that you could live through drawdowns, which we all have. And
Yes,
you're a mentor now.
correct.
And I get asked this question all the time. Dale, can I trade for a living with $10,000? Have you been asked that question, Chris?
I,
What do you tell them?
every time we talk about education,
Yeah,
somebody's like, how much money do I need to get started? How much money do I need to? But that question there, Dale, I would say, absolutely not. I mean, I feel terrible
yeah,
saying that, but it's like, the pressure that you would put on yourself, the
yeah,
mental hurdles that you would put on yourself, and the pitfalls you would go through psychologically would make it self-sabotage times 100.
yeah. Well, you're
I think
nicer
that
than me. I tell them yes if you want to live beneath an underpass.
if you want to live
All
under a
right.
bridge, sure, go ahead.
All right. So uh, it's a good idea for people to have more than one stream of income, especially when they're breaking into the trading field. And, I've interviewed well over 1,000 traders,
hmm
analysts over the last several years between Forex Analytics, Face, and FX Street. And I always ask people, how long would you say it took you to make a breakthrough in trading to where you really thought, you know what, I've got it now? How
Yeah.
long do you think it took?
Yeah. It was probably, well, because I didn't quit my day job, and I kept, I kept at a couple of core strategies and was able to generate some returns from that. But it was kind of a lightning in a bottle type year for me, where I took about 25K and turned it into 100K. Now that's not my style now. But like I said, it was like the right strategy at the right time. I was so confident at the time. I was trading, on my computer, on my phone. I vividly remember placing some trades in the morning. I was an analyst at the time and just running some sessions where I was up at 2 a.m. my time until about 7 a.m. and I was running a trading room. And we had placed some trades together. I believe it was on a Friday because I was getting ready to go to the airport and fly somewhere. And I just placed trades in the session in the morning. And on my phone, I had like $4,000 later that day in profits that were already set ahead of time. And it was that type of like confidence that was incredible. But about 8 months later, hit me with a pretty hard dose of reality of like, okay, I thought my strategy was great and I figured it out. But once you realize that, holy crap, here's a 50% drawdown, here's a 25% drawdown. Now what do you do? Now what type of trader are you? That really forced me to open my eyes and realize like I'd only been trading for about 2 to 3 years at that time. So I would say that year was probably the most important learning year for me. Fortunately, I've never blown up an account, which I'm very lucky and fortunate to say, because I know most traders, wear that like it's a rite of passage or a badge. Yeah, it's a badge of honor. Like it's not exactly. I mean, that's why I enjoy what I do now, to be able to teach and have some followers and trade live with a ton of traders, because I don't want traders to start out on that note. I don't want traders to start trading and have these low barriers to entry in these leveraged markets and then get in and make some, common mistakes, and just then they have a huge setback and they stop or they quit. I mean, Justin at Forest Park, I mean, he's said very plain and simply, why traders fail is not usually a strategy. It's not usually, it's probably equity management, but it's just flat out like they just make poor equity management mistakes. They hold on to losers way too long. They get out of winners way too quickly.
It's all in our
It's not a
heads.
secret.
Yeah, it's all in our heads.
Yeah,
like
sure.
real estate is location, location, location. Trading is
Mhm.
psychology, psychology, psychology.
Yeah,
So
that's a great point.
you didn't really give me a number of years, but the
I'd
average
say, I mean,
answer.
I'd expect 2 to 3 years is like the learning
All right,
curve. But
I get
again, I'm in a
4.
position now where I can hopefully accelerate that. That's what I
Yeah,
like to do, is I welcome traders from the very beginning to seasoned veterans. I mean, I like trading with, great traders, and I like trading with noobs as well, because I think that we can cover a lot of ground. We can learn very quickly. I see a lot of a lot of comments coming in like, I shaved because I did have I was going to keep a beard. I had about a 4-week beard running because I was in protest for some of these profits I was holding out on, and I couldn't take it anymore. Plus, I got paid a lot this week, so I went ahead and cleaned up for today's session.
well, what kind of razor did you use?
Actually, you know what? I'm a
I
big
mean,
fan of
I didn't know
Costco,
we were
so
going
was
to talk about this. So, what do you,
yeah.
electric or a blade? Are you a
No, it's
blade
a
guy?
blade. It's
All
a
right.
blade. I needed a trim first, but then it was a blade. But yeah, nice
What's
little
your most
Kirkland brand, Mach
What's your
3
most
knockoff.
important teaching?
What's that, Dale?
What's your most important teaching to your mentees?
Mm, I mean, I'm very risk averse. I know that's come up a ton in this summit, and I think now is a great time to really embrace sound equity management principles. But understanding that we trade to, like, let's keep the profits really simple. Let's keep the math very simple. If you can find great ways to buy low, sell high, whatever financial instrument that is, you buy low, you sell high, you go after a surplus, meaning your reward is outweighing your risk. That is a nice mathematical way to be profitable. So if I can get traders to embrace that, and I know that's probably the least exciting thing to talk about, it's the least glamorous thing to talk about, but that's what keeps you in the game. And I think that's what keeps you surviving these markets and live to trade another day and just keep plugging away. And I think that trading is a grind. It is exhausting, but you're only as good as your current and next trade. So, I mean, even though it's been a great, handful of years, and I'm happy with how things have been going this year, at the end of the year, when it's all said and done, I start over and it's a brand new year next year. And everything that carries over, if there's commonalities, great, but I'm ready to learn a bunch of new lessons next year, because it feels like every year there's something else to take away from it. There's subtleties, there's nuances. And so I just try to get traders to be open-minded, be prepared, but have a very concrete sound equity management plan so they can survive and stay trading.
What's your edge?
Um, Probably, I mean, honestly, just what I was talking about, like the open-mindedness. I mean, I run a trading room called the Flex Trading Room, and the whole
Okay.
purpose that I gave it that name is that's exactly what I am. I have a ton of strategies at my disposal. I have core
You're
strategies that I
flexible.
rely on. I
Flexible.
believe in market seasonality. So, I mean, I'm trying to capitalize and optimize how I trade based on what conditions are providing. So I'm really flexible in that sense. I think that helps me a lot. That tempers my expectations. But when the things are right and everything is aligning, I try to be as profitable and aggressive as I can be.
Who have been your biggest influences in trading?
Um, I would say, I mean, I'm going to give the shout out to my man Peter that got me started. That was just eye opening to see. I bought my first Apple share when I owned an iPod back in like the late '90s. I mean, my stocks have just been like, oh, I like Netflix, I like Apple, so I have stocks. But it's like, as far as becoming a trader, I owe a lot to Peter and getting me in the Forex market and really learning the ropes of market structure, liquidity levels, efficiencies, and just a ton of scalable strategies. And then from there, it's been a really unique journey just going into one-on-ones and coaching. Rob Booker, if that name rings a bell for a
Yeah, I
lot of
know,
you, he
Rob.
was a great influence on me.
Okay.
Rob and I are great friends. We actually just launched a course together maybe 2 or 3 weeks ago that we're having a ton of fun with. And that's, I mean, he was the one that allowed me to see that lightning in a bottle, and just also seeing that his authenticity, his live trading, his transparency. That's what I've kind of evolved into. It's like, now that I'm looking after a decent amount of capital and trading the assets that I'm trading, that my returns don't have to be magnificent. I mean, I can be very content with a 12 to 15% year. I can be very happy with a 15 to 20% year. I'm thrilled with that, actually, as long as I keep that risk under control. So that would be probably one of my biggest influences. And then the team that I work with now, I mean, being back with market traders, I've been on and off with them for the last decade. I'm fortunate that I have a whole team of developers behind me. So when I want to do something, I want to build something, we can get it done. So, I mean, my creativity in the markets, or I want to try something, I want to prototype, I can build whatever I want, and it's helping me be a better trader. And then with having thousands of traders behind me and follow me in a trading room, I can help a lot of traders as well. So that'd be kind of how I'd summarize just overall influence of where I'm at today.
Okay, well, tomorrow we're going to have Jack Schwager, and he's interviewed a few good traders.
Yeah,
And
yeah, I could say.
I've interviewed Jack, and I said, "What's the most important advice you could give to a trader?" And he said, "Find a trading style that suits your personality."
Yeah.
So, what suits your personality? What kind of trading do you do?
Yeah, that's a great question. So I would say that what I've kind of gotten into more of the last couple of years, number one, I have incorporated a lot more automated trading in my strategies. And it took me a long time. I mean, I've been exposed to some great robot traders out there and algorithmic traders out there that do a phenomenal job. One of them's a good friend of mine, Scott Welsh, who is actually top 5 right now, and he's got like 80% tracked for returns. And he's fully automated, and he's always like astounded me of how consistent that is. And so I know it's available, but I also saw how much research it takes and how much trust and confidence goes into that preparation in order to turn that robot loose. So as I've become more and more consistent with my profits, I've become more and more confident in my ability to automate that strategy. So for example, I tend to find big trades on big time frames and build some very, very small positions and work myself through these very small manageable trades that I then accelerate my trade size, get into bigger trade sizes, build up these positions for these big cash injections. Just to name a couple this year, some of my big payouts this year, Aussie New Zealand was a huge payout for me this year. Euro Swiss, I'm talking Forex specifically. Stocks has been like a gangbuster year, just because if you had the courage to buy in March or April, you could make money on anything, which is not what it is all the time, but it's been a pretty phenomenal year in stocks. But in Forex, I mean, the way that I've been trading is I've been building these base positions and then having an absolute destination in mind and being willing to stay to it. And so, as you hear, hold on to your winners and cut your losses quickly. I mean, I'm trying to manage my losses or manage the risk by being very, very small and conservative until price proves and confirms that now we're going somewhere. Now
So you
it's time to
scale
start
in
looking at it.
to build a
Yeah,
position?
absolutely. And not just scaling on the downside, Dale, like scaling also on the upside, scaling when it's in the right position for you and you're adding to
Okay.
it. So any added position, for example, like a buy stop or a sell stop, when price keeps going in your direction, you're playing with added margin. You're actually seeing profits run, getting your trade size increase. So by the time it hits your destination, it's just another maybe 5 to 10 positions of add-on trades. So that's been probably my best transition into like bigger profits have been because of that style of trading. And that's what I like, because it doesn't require me to be super precise and super accurate, and I'm busy day to day throughout the week. And so for me to get into a very specific window of I only trade a couple hours a day, it's like I'm on my phone like Monday to Friday all day every day. No time is really out of bounds. But I do it because I want to be connected and know where things are at. But I'm also, I trade small enough and conservative enough that everything's kind of under control. So, I did have some drawdowns this year. I sat in some unrealized drawdowns that were about 12%, which for me is actually very high, because the last several years have been like 3 and 4% drawdowns for double-digit returns. But this year was 12 to 13%, which I just, I had great trades in. I had small positions in, but just everything was pretty berserk in March, and in the Forex market and the stock market, everything went crazy. And when you had halted indices, and volatility just went rampant there for a couple of weeks. But then as soon as we saw the safety net with the Fed and central banks and just emergency cutting, you could sense that volatility was being suppressed. So I was able to transition out of that, where I was really aggressive in March, started to transition into short-term trading. And so it kind of goes back into like open-mindedness. Like, if going into the next couple of months, if we see a very volatile October, more than likely, I would say a very volatile November, going into the election, through the election, whether we have, a 7 to 14 day contested election, we don't know. This is just a ton of uncertainty that I'm sure everyone is bracing for. I certainly know that I am, but I will be very flexible, very nimble, moving forward. So I
Okay.
think that
So
my goal is to not do anything stupid for the rest of the year.
okay.
Like, just
So
finish strong.
okay. So
Yeah.
we pulled back about 10% in tech and S&Ps,
Yeah.
back to a very important in my work 3,200 level,
Hmm.
and we got a little bit of a turn late in the week with some divergences. I guess the question is here, going into the election, everyone's thinking they're going to throw everything at it, the administration, to try and generate a rally, maybe even new highs into the
Right.
election. The big
Right.
question is, and I'm wondering what your thoughts are, do we have a bounce that's a failing rally and takes out 3,200, or are we going to march to new all-time highs?
Um,
Put on your
I
Nostradamus hat.
Yeah, I can't rationally believe that a new high is sustainable. And again, from maybe it's because of my technical background in Forex, of just like, I see the chart, I see a massive megaphone and broadening formation. It's hard to
Yeah,
believe that at those new highs, that it's not artificially done, that it's not financially engineered. The last couple of days, we've obviously seen a lot of disgusted talk on the Fed, and it totally makes sense. So moving on to the election, and if we have some rally, it's like, okay, so don't fight it. I would certainly not want to be the one that calls the top, but at the same time, I mean, just like was what we had back in March and April, if you were a part of that rally, enjoy it. Take
yeah,
that cash and have that margin available, and keep kind of trading. I mean, it almost seems like a day to day, week to week. Don't do anything silly. Make sure you're risk averse. And then moving into next year, it's like, I have to believe that there's going to be some sense of reality that's going to have to take the markets by storm. And it's going to be a big mess. I mean, we're creating all sorts of extremes and all sorts of bubbles. And it just seems like everywhere you look is one disaster after another, or potential disaster. And I think that has a lot of traders on the sidelines. But that's okay. Like, it's okay right now to be a spectator. It's okay to grind out some profits, and not have it be like, I've got to be super aggressive right now. It's like, there's a time and a place to be aggressive, but I would rather keep my capital and preserve my capital and know that I'm going to live the trade another day, than risk it all on the line and try to be like, this is the best environment, we need all this volatility, and then do something really silly, because that's an easy way to just make an avoidable mistake. So I'm all about just staying the course, staying in the game, and on the higher time frames, obviously if you go to higher time frames, look back historically, you can eliminate a ton of noise and not get stuck in, what might be, a 1 day exciting move, a 5 day exciting move, but in the grand scheme, it might be very quiet, all things considered. So
Well,
my Nostradamus hat is, I don't know, Dale. Honestly, I've said
that's
for my
fine.
prediction is a question mark. It's
Yeah.
anybody's guess, and I don't really care, because if there's one thing I'm asking for the markets, it's volatility. If we get volatility, I'll find a way to trade it, and I'll find a way to either be short term and just scoop up some profits when I can, or I'll see some big structure that I want to stay in and kind of test the waters and see where this goes. But my goal would be, if I'm getting into trades, I'm going to try to eliminate risk fairly quickly and give the market generosity a chance to run. If we actually have some really aggressive trends and rallies, and whether it's real or not, if it's going that way, I might as well trade it. So I don't want to be the top picker, the bottom picker. I want to be, trading with the actual momentum. So that's
Do
going to be
you
my approach.
do you use hard stops, Chris, or
I
do you
don't.
use mental
I don't.
stops?
No, I did when I was, so my first real core strategy was day trading. I traded this, this guy Peter was, he managed probably $10+ million in Forex, and he was a day trader for the euro dollar. Traded a 1 hour chart was the highest time frame, 1, 2, and 3 minute charts. He aligned them for direction, and he would go after a 20 pip stop and a 20 pip win, and just try to have a decent strike rate and a high win percent. He made a lot of money. Guy was making as much money as his lawyer friends and doctor friends he played golf with every single day. So there was something valid about it. That was I see the importance of a stop loss. But once I got more into the bigger picture and the higher probability of, when I was fortunate to trade anything against the yen in 2012, anything against the yen in 2012 to 2013 and 14. How many pips was that move? You went from essentially 80 to over 100 on the dollar yen. You went more than that on the pound yen, the euro yen. So I was enamored with the type of trader that could do that. In fact, that's how I wanted to. That suits my personality more, is to find a great position and nurture that position, and then have it be that injection of profit. If my, if my safety net of profits through the year is made in 5 great trades, and then the rest is just kind of pieced together and put together throughout the year, that's fine. But that's what I find I do really well, is I don't use a hard stop loss. But I will say there has to be a mercy rule. There has to be a white flag. There has to be a line in the sand. And I've had
So
many of those.
What is
What
it?
is it? I would say, for me, I'm going to say, if I'm sitting in, and I'm not going to close a whole position, but if I have, let's say in Forex, that I've leveled myself in, if I have a drawdown that's 5% and my break even is so far away and the trade is running so far against me, what I'll have to do is just start realizing chunks of losses and just know that I'm going to have to wash it. I want to make sure I have plenty of margin. So even if I'm nursing a trade that's going against me, I have other trades that are working for me. But it's okay to take losses. So that's the trade-off, is if I'm not using a physical stop loss, I still have to have some exit strategy. So a lot of it is a percent drawdown, a dollar amount, and that keeps me honest. That keeps me out of too much trouble. But I tend to not, take full position stop. I tend to take small chunks in multiple positions, small chunks and scaling out, small chunks and adding back in. And I basically manage several groups in my trade where I test the waters. I trade confirmation. I give myself some flexibility on the areas where I know I could be wrong and invalidated. But if it goes my way, I tend to step on the gas and go towards my profit destinations. So
Okay.
to answer your question, no, I don't use a physical stop. But
Okay.
the way I teach it, I'm very open and honest with my my live accounts, my trading room. I'll show traders my MT4 chart. Sometimes there'll be like 20 positions on there, and they're like, "Well, how do we trade that?" I'm like, "Just look. Here's my break even. This is my major area. This is what I'm working on. Here's what I'm going to add to it. Here's what I'm going to wait a little bit longer." And I try to kind of give the perspective of, this is the group that I'm trading. This is the big area. This is where I want price to go for me. And that's what I said. I was nursing a beard for the last month, because I was just frustrated with how long it was taking to really see the markets turn in a good technical fashion. So I was a little disgusted, but hey, it all worked out this week.
Well, the last time I used a mental stop, my first stop was a mental institution. Right.
Yeah.
So, I've
Well,
blown
your
myself
name
out
is
that way.
Forex Stop Hunter, right? You
Yeah.
know the deal. Yeah.
Yeah. Now I'll trade looking for stops.
Sure. Of course.
because that's the liquidity algos are looking for too. So
Yeah.
do you believe there are stop hunts?
No, because it's public knowledge now. So I mean, if you want to call it stop hunts, then don't put your stops there. I mean, obviously, if they're going to test highs and lows, and I will say that you're going to see highs and lows tested more now than ever before. As we've had suppressed volatility, the market almost on its days of nothingness, as volatility is extremely low, the markets are bored. So what is it going to do? It's just going to run up to a high or run up to a low, not really move anywhere. But intraday, you're going to see those stop hunts. But the
Yeah.
reality is they're there and everybody knows it. So, I mean, if you know your stop loss could be in jeopardy, then trade smaller and get it out of the way. I mean, it's not that hard of a solution. I just say the hard part is traders always want, where do I get in? Where do I get out? Well, that's great. But I'm a big believer in the stop area, which means if price can't close above that price or price can't close below and my trade is still valid, I do my best to stay in it. I don't like to put that physical stop loss there and see, the price wick up to that high or low that stops me out and then just sits there where I was at my break even point. So it has to invalidate it. It has to really close above or below for me to say, okay, look, let's take another look at this trade.
You consider yourself a trend trader or inflection point trader?
I probably do better with tops and bottoms, to be honest. Once I started to really, dig my heels into the to the technical world, I learned a ton about price patterns. Head and shoulders, rising, falling wedges, some of the big extremes. I started to line up a ton of highs and lows and overbought, oversold conditions and divergence. And so I started to get really decent at again, not calling tops and bottoms, but seeing that, okay, this is a pretty good area to see one, and then looking for all the price clues to kind of put my positions together. That tends to be where I make my bigger profits. And then when I have, inside of those areas, when I see that, okay, we can go from point A to point B, I'm fortunate. I have a lot of, great robots that I can run on little sub accounts and they can run in that direction. They can do a lot of the pickup trades for me. So I can find some great trending environments. But I don't, I honestly, Dale, like I'm a weak trend trader. And I say that because I've done an amazing job over the years of finding some high probability turning points and trade those, really profitably. But what I tend to miss out on is the continuation. I might find the absolute bottom and trade the first chunk of that and then watch it go, hundreds and hundreds of points higher, thousands of points higher. And it could be literally a month or two long. And I miss that entire, that the second half of that run because I'm like, well, I did my part, I took my profit, and I'm done. So now, if I have a little bit more of a blueprint on where I plan price to go, I tend to let robots pick up a lot of that slack for me, and they're better trend traders than I will ever be. And the reason why is trend robots or trend trading in general is you're trying to keep the smallest possible risk in the smallest possible area and have that high reward run. The hardest part about being a trend trader is unless you have that destination in mind, you're just kind of getting in, hoping it goes higher. You're getting in, hoping it makes more in reward than risk. So again, I kind of let the robots do that. I recognize that's a shortcoming of mine, and I've fallen back on automation to help me be a better trend trader when the time is right. But I
Yeah.
think Forex is a lot of
I
range
think
bound
it's one of the
conditions.
most difficult things. Look, it's great to make a good call. It's
Hmm.
better to trade the call.
Yeah,
And the toughest part is to have a great hold on the trade.
sure.
So, and the only way I've learned to overcome it is by taking partials and then letting something go.
Yeah, that's that. Yeah,
But I have a hard time. Right? People ask me, Chris, Dale, why do you even write down your objectives? You rarely sit in the trade until it gets there.
right.
Okay, so anyway, that's my weakness. We all have them. What would you say yours is?
My weakness.
Yeah.
Yeah, I would say that depending on the setup, I can be a little bit stubborn. I can be a little bit married to a position or two. I'm willing to work through some trades. Sometimes that forces me to sit on my hands a little bit longer than I want to. But my trade-off to that is I justify it, rationalize it by having small positions. There's only a few currency pairs that I really have a ton of conviction in. Case in point, one of my best trades this year was the Aussie New Zealand, and I absolutely love that currency pair. It's essentially
What do you
commodity
think
versus
about it
commodity.
here?
What's that?
What do you think about it right in here?
Where it
Aussie
is right
Kiwi.
now?
Yeah.
Yeah, so look, I'll tell you, this is exactly what I want to do with it. I think that if I'm going to make a projection for the Aussie New Zealand, I want it to go to 114. I think there's plenty of structure to create that move to get additionally bullish to 114, but I hope it pulls back. I want it to be at 106. I want it to be at 105. I want to buy it in that window again this year. During March, like all the volatility that kicked into March, I had levels to buy at 106, 105, 104, 103, 102. I just added up all those zero trades, had the confirmation on the flashy moves. We had 2 flash crashes in like late February, early March, and those moves filled me on all those levels. And I was in with the base at like 103. I added to it like crazy. So as soon as we had confirmation, we had that bottom in off the zeros, like 1.00. I was adding like, I think I added like 20 positions on the Aussie New Zealand to the upside until it hit my profit at 108, which it did. Now that we're back towards 107, hopefully we come down into that 106, 105, build up that supply base, and let's see it run to 114. And then from there, if you look at, weekly chart, 114 highs to 1.00 lows, that goes back to 2014. So that high at 114, I'd love to see heavy resistance. I'd short it from there. But until then, I am a bull on the Aussie New Zealand to build positions. I'll say this, though. It's like watching paint dry. So the way that brokers have it done now, you will sit and you'll pay rollover after swap, after commission, and it'll add up. But again, we keep it small. We keep it, we test the waters. If we can add to it when it's going our way and actually moving, because it does trend, whenever it trends, it's an amazing currency pair. But you'll sit on it for several months. But if it takes several months to get all the confirmation, add to it, make a much bigger winner out of it, it pays very nicely. But the reason I love it so much is it's a great technically obedient pair. It's a lot easier than trading the pound pairs going into Brexit news. It's a lot easier to trade the yen pairs in and around an election where it's sentiment based. The stock market sells off, the yen moves. Right? You see these correlations that sometimes make sense, sometimes they don't. Volatility in Aussie New Zealand is really, really light. It takes a lot to disrupt that currency pair. So for the most part, I'm willing to like sit in it, weather the storm, and just kind of move around those groups so I can be profitable.
What's your view on holding positions into red events like Fed, NFP, central banks?
When I was first trading 08, 09, when the days of you could still straddle the news and get filled with a guaranteed entry and stop, those days are long gone. So my news days are, the news is interruptive, it's supportive, it's disruptive. I think the news exists to just
you flatten out.
What's that?
Do you flatten out before the numbers?
Rarely. If I'm in a position, I'm in a position.
Okay.
So I'm going to tolerate the news. I'm going to deal with it. I think it's something that you just. The sad part now is a lot of times we don't have any real movement consistently without having a super busy calendar. But that's, again, it's like, what do? You want to get mad about it, or you want to just realize like that's how it is right now. You don't have movement, you don't have significant movement without having a ton of news. But even you have tweets, you have random headlines that can produce these technical movements. And I think news is just, it's mostly interruptive. But volatility is low enough right now that it's not too bad. So I don't close out prior to news. I'm not a day-to-day trader. I'm not an intraday trader for the most part. So I just deal with it. Traders ask me all the time, would you close it up? It's Friday. You're going to close your positions. I'm like, if I still have, room to go, I'm going to sit on it this weekend. And if it comes back next week and it doesn't do anything, I'm going to sit on that. And I will go towards my profit destinations, but I will say that it's also, there's a close enough window. So you said earlier, Dale, like, you sometimes don't hold. There's a close enough window. A lot of times when I'm identifying profit areas, it's not a very specific price. It's a window. I want to get to a destination that I'm happy saying, okay, we've crossed the threshold. We're on the home stretch. Now let's start protecting those profits. Because I hate, of course, when you're nearly to the destination and price pulls back. If you've got a great run of profits, and traders ask me all the time, like, what do I do with these trades? What do I do with these profits? It's like, that's the best problem to have. So my answer is, you got to do everything you can to keep them. So if that means moving a stop loss, move it into a trailing stop loss, walk away from the trade and just let it run, see if the market wants to be generous. For once, see if the market wants to be benevolent and just run for you and let your winners run. But at the same time, if you've eliminated all your risk and you're moving into profit, break even sucks. Unless you're like, just eliminate risk so we don't lose. I'm talking about when you have significant profits in your P&L and you just go to break even. That is, to me, that's like losing. It's like, I want to protect a majority of those profits, because That pays a lot better than break even. And I know that because when I first got started, I had a book, a little orange journal that was all about, if I got the 20 pips of profit, I'm supposed to move my stop loss to +1. That's what this guy told me, right? So I had hundreds of pages and entries of like +1, +1, +1. I think back, it's like I was trading with not a lot of capital. I had like a $2,500 live account, $2,500 trading $5 and $10 pips with 100 to 1 leverage in Forex. That's a lot more than I trade now. I mean, I build positions up to be a standard lot or 2 or 3, but I was trading that every single day on a 20 pip stop loss. So to see a +1 then, and know that like that was at one point, that was +20, that was +15 before I moved the stop loss. Like I would have been a much happier trader with a lot more money just moving to +10. Instead of +1, go to +10. So if you're up 100 pips, move a stop loss to 50 or 60. Give yourself something. Unless you're, and again, mentally, if you're like, I'll be fine with break even. I either want my full profit or break even. I mean,
Not a
okay,
profit till you take it.
yeah, I mean, and you can give it a chance, but I'll tell you, if you move that stop loss, expect price to find it. And that goes for the same thing. If you're 100 pips or more, or 500 pips in profit, and you move to break even, just expect price to find it. It has an amazing way of doing what you don't want it to do sometimes. So that's, I
Okay.
see the question there, like staying disciplined. It's like, it's
Yeah,
just reps, man. A lot of repetition, a lot of trades over the years, but we get to see a lot of examples. We trade live every single day. So I mean, there's tons of examples out there where I can walk through, my experience, traders that have been with me experiences, and there's plenty of ways to get repetitions in the markets.
Okay, and while you're teaching, Chris,
Mm-hmm.
what would you say is the most rewarding thing that you've lived through as a mentor to someone you've taught?
Yeah,
Let's hear a
I
good
mean,
story.
yeah, there's a couple of, I mean, right now I have a ton of traders that, every single week are posting some amazing results. My favorite story right now is just having a trader come in that's fairly new, and for the first time they had their first 100 pip trade. For the first time they're showing positive gains. For the first time in years that they've been struggling, finally making some money and showing that they can do this, and they can pay for their education, and they can start looking ahead and be more excited and be more optimistic about trading, and doing it for whatever the purpose, whatever it serves you as. Like, I just want to be able to help be instrumental in that. So those are my favorite stories. I'll bring this trader. Her name was Tammy. She was a longtime follower of mine back in like 2012 and 13. We did a couple of conferences. And Tammy, so her story was this. She, like, to the T, like literally followed just one of my strategies. And it was just a really simple swing strategy with symmetry. And so I'll just, I mean, I know that we're kind of doing this interview, but if you can just imagine that you can draw like a swing, right? The market goes from a low to a high. So you
Yeah.
measure that swing. Now, it would
Right.
make sense that if that market goes from a low to a high and then forms a higher low, we're going to go to a higher high. So
Okay.
Tammy was using my symmetry strategy, and she was like doubling and tripling these like 25 and 50K accounts. It was I mean, it was insane. And what she was doing, Dale, she actually influenced me to do a lot of what I'm doing today, which is add to the winning positions. So what Tammy was doing was getting in this base position, adding tons of buy levels of like buy stops to just let price go, 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 go. And then she would take it to symmetry. And she was long, I mean, this would have been
Interesting.
2014 and 15 on like Aussie, New Zealand, Aussie, Swiss, New Zealand, Swiss. When we had the big flash crash for the Swiss, we got a big flash crash in commodities and oil in 2015. She was long on all those reversal patterns and all those V bottoms, and every one, like, just perfect little swing to symmetry, and made her like hundreds of thousands of dollars. Like, that is an amazing story, and it sticks with me, and it's actually influenced what I do as far as like helping traders understand how you can add to winning trades. And then, traders now that are brand new, that are just seeing me for the first time, I will say this: if anybody joins me in my trading room, the pace in which I go, I'm not trying to be, at hyper speed, but just I can talk about these markets all day, every day. I do talk about them all the time. So I'm always pretty high energy. I tend to talk pretty fast, but I promise you, anybody that's out there, if you're in my trading room or in a webinar with me, you'll get the same consistency every single day. Like, I mean, to me, to have this be like a 45-minute session, I'm used to talking, Dale, like 8 to 10 hours a day. So I can do this all day long. But I love knowing that, traders can come in with little to no experience, and it's like drinking from a fire hose at first, but you adapt with me for the first week or two. You understand my style. You see that we do the same thing each and every day. There is a process, there is a routine, and guess what? We're trading together. It's easy to follow. You've got a community to join and see that everybody's doing the same thing. And, that way you don't have to be like conspiracy out there, like, oh, I mean, I can't trade with everybody else. I got to go against the grain. We got these sentiment-based institutions that are trading against retail traders. Like, yeah, they are, but we don't have to be the victim here. We can still be on the right side of the trade. We can still be in the winning side of the move. But obviously, we're always picking and choosing our battles and our strategies.
Are
So,
you
but that's
doing
my
it
favorite right now. That's the
virtual
most fulfillment I get.
like now, or did you used to have a physical location for your trading room before COVID?
Actually, so I've been doing this now. I'm trying to think. I mean, man, it's been a long time since I've been in South Florida. I think in 2014, 15 was when I was in South Florida, in Orlando. And it was still virtual. We did everything, and we have traders all over the world at Market Traders. So it's always been like a go-to-webinar. It's always been
Yeah.
online. This year, the only transition for me is my wife now works from home. I live in Ann Arbor, Michigan, so for the university here, she
Yeah.
works from home. She has been since March, and I don't know if that's going to change for a while. But for me, it's been the exact same. Like nothing day job wise for me has changed. And so in that sense, I'm very fortunate. I do what I've been doing for a long, long time. And but I would say, like, it would be fun to do something like this in person. I mean, this panel is amazing. The talk this morning was incredible. I mean, there was some heated moments, but it was like everybody is mutually respected, and just, it was an awesome panel. And Michael's job and Lynn, like, just incredible stuff coming out of these interviews in segments. So I'm really happy to be a part of this. And I'd love to do something, more of these, and certainly like do it in person. Which, like, eventually it's like, this would be great to do in person. You can have these one-on-ones with traders that just, maybe something I say or maybe something anybody says, it resonates with them, it sticks to them, and it helps. I mean, you like you said, Dale. I mean, going to work with somebody that fits your style, going to work with somebody that you see what they do and it makes sense. Because I mean, and that's why I'm trying to be flexible too. It's like, I know that there's probably 3 to 5 ways that I get the job done, and I'm trying to work it every possible way that I can. I don't like to throw away things that work. I like to change things that don't work. And a lot of that just comes back to, better equity management and better decision making, and just staying flexible. I don't know. That's
Okay,
a
Chris.
hard thing to do. I just,
you know
maybe
what,
just
Chris? I
help
wish
me.
you were a little bit more enthusiastic about your career. And so if people go to MTI and they want to work specifically with you because, they've seen you, they've heard you, they
Yeah.
want some of that energy. In
Yeah.
fact, I want a quart of your blood, a transfusion
Do
for
you?
me.
Hey,
Yeah,
it's pretty clean. I'm not saying it's O positive. It may not be universal, but I've donated plenty of plasma out there in my college years. I gave plenty of plasma, so it's out there circulating somewhere.
all right, Chris. Well, what's the best way for people to be in your room?
Yeah. Hey, if I can
Monday.
grab the screen, I actually have a couple of slides. Is that okay?
Oh yeah, sure. You could
Okay,
have
let me
grabbed
grab
it.
the screen here. I had a whole presentation today.
Oh my goodness.
Dale,
Yeah.
Dale. Hey,
Yes.
Chris. People are already asking to invite Chris on Face, so I think
Oh yeah.
the first thing you should do is extend
We'll book an
an
interview.
invite.
Yeah, that'd be awesome.
Okay. All right.
So if you want to follow me out there on social media, I would recommend, just, again, free education, free weekly outlooks. I do this every week on Monday, my YouTube channel. Just search my name. I think I have it right here, actually. If you just search my name, Chris Pulver, there's my YouTube channel. I post videos every single week on Monday. I also have a playlist of a running education series. It's all free. I just call it Keep It Seriously Simple. I take a ton of feedback of what do you want to see? Whether it's a stock, strategy, or Forex, or equity management, growing your accounts. I mean, this video playlist is still evolving and still growing, and I'm taking all that just based on demand. So that's an easy way to follow me. Also, if you want to look at my trading room, easy way to jump in is inside of smarttrader.com. We run our trading rooms directly through our charting software. So you can come into our marketplace, which is right here. So I'll share the link here in just a moment. But in our marketplace, it should be right at the top. We have trading rooms right here. and there is my Flex trading room right there. So as Aaron
Okay.
said earlier on Friday, we have a great team in place. We all have different trading rooms, but my style is in the Flex trading room. It fits what I do. We're live Tuesday, Wednesday, Thursday. We get to spend probably 6 to 8 hours a week together. And Monday's weekly outlook. This year, just throw it out there. Traders that have been with me, we've tracked a ton of trades, and we're up about 40,000 pips for the year, which is pretty good. That's one of our best years we've had. And this is just the track. So we're at 39,279 for all trades we've talked about in person, in session, letting some robots run on some of them, taking manual trades, building some positions, just doing whatever it takes to be profitable. So I wanted to call this and I'll end it here. I wanted to call it the WIT program, which was the acronym for whatever it takes. But I thought Flex a little bit more fitting because, I'm not desperate to make profits. I just know that I'll do whatever it takes to get them. So, but I'm just trading to be profitable. That's it. That was the whole point of today's segment, was trade to be profitable, not perfect. We can get the job done a lot of ways, but when you're in the trenches every single day, it's not easy. It's a process, it's a grind, but there are ways to do it. It doesn't have to be an uphill battle. I think we can learn from each other. I've learned a ton just being here at this summit. It's an amazing panel. I'm so happy, like I said, to be a part of this. And thanks a lot for having me.
Don't expect perfection at the crap table.
There you go. Or the
Thank
roulette,
you, Chris.
or the roulette wheel.
Or the roulette wheel. Red or black, that's an NFP bet. So thank you very much, Chris. And
Thanks.
great meeting you. And I'll be in touch with you to schedule something.
Sounds great. Thanks, Dale. Thanks, Steve.
Great energy.
Thank you, Chris.
Man.
Have a wonderful rest of
Great
the day.
energy.